How profitable are syndications? Let's find out. What's up, friends, and welcome back to Finance on Fire, where we talk all things early retirement, or at least, how to get there. Me and a wife, we've got a 10-year plan. We're trying to condense that into, 2-5 years. That sounds really quick, so stay tuned and see how we do it. If you've been following the journey, you would see that me and a wifey has invested into syndications, aka big real estate deals, to fire up our early retirement journey. When I mean big real estate deals, I mean the real estate deals are big, but we are tiny fish in the big ocean. Keeping things simple, syndication is just really a real estate project or an opportunity where they're looking to raise money to fund that deal. There's a lot of regulations around this with the SEC, so most of the time you have to be an accredited investor. If you're not an accredited investor, there's still an opportunity for you, as they're allotted a certain percentage of investors that are not accredited that can still get into the deal. There's a ton of websites now, crowdfunding sites, where you can all get together online and get into a real estate deal. Something that I've heard recently that makes a lot of sense is that you want to invest into things that's going to be here for the long term. Sure, technology companies, Facebook, Google, Apple, they've been tried and tested. Pepsi, Coca-Cola, they've been around for ages and ages. One thing that's not going to disappear tomorrow are your neighbor's house, multifamily condos, apartment buildings, commercial buildings. They're going to be here for the long run as well. We have a limited supply across the nation and a lot of people looking to get a home, so real estate is a really good market to be in. Tip number 1 is do your own research. You can go to your local RIAs, which is your real estate investment community groups. Thankfully, small gatherings are allowed again, and hopefully your local real estate community are having some meetups. There you can meet agents, hard money lenders, maybe even some construction people, and most definitely you'll find some people raising money for syndications. Sometimes you need to go to more than one meeting, go to some different areas as well. Make sure to attend as many meetings as possible. And that brings us to number 2, making sure that the people that you meet, the syndicators that you meet, have a really good track record. A lot of them will have shiny PowerPoints laying out the returns for the past 10 projects. And if those projects were truly successful, they wouldn't mind sending you the details of their closed project. Those details should break down the original acquisition cost, construction cost, investment, and the returns at the end of the deal. Seeing what has actually been closed and divested back to the investors is the best sign that you're with a good group. Smart syndications will not overproject. They'll actually give you a conservative return and overdeliver on those. I've heard as low as 5% return all the way as high up to 20% return on your money. After you've done your own research, you looked into the details of past closed projects, maybe you've even physically looked at the property yourself, something I've done, then you're ready for step number 3, which is to start small. A lot of time, these big syndications require a $100,000 minimum. That's small to them. However, if you network into some mom and pop startup real estate syndications, it's actually a good place to be because you're with them there in the beginning as they're growing. During those times, you could get in with a lot lower amounts, maybe even $10,000, $20,000. Anything less than $25,000, you probably don't want to invest into real estate syndications. You're better off taking that money, investing it into the market, or utilizing for your own business to build up some capital. As a matter of fact, if me and a wifey had a business opportunity, we would have most likely invested into that rather than investing into a syndication. Why is that? Because syndications take a long time to get your money out, usually 3 to 5 years. And if you have a small amount invested, it doesn't mean that it's a small return. It just means that there could be better things that you do with your money. We live in some crazy times right now, and the last 10 years has been crazy for the market. If you just invested into the S&P 500, you would have averaged a 20% return a year, which is absolutely insane. Most syndications will not be able to give you that same 20% return. However, syndication is a little bit safer because stock markets go up and down. Well, not in the last 10 years, but you know what I'm saying. There could be big crashes coming up that you don't know about. Of course, there could be corrections into the real estate market. However, syndicates or seasoned investors in real estate already has worked that into the model. Make sure their model can withstand a meltdown like 2008 or even now 2020, because those are the benchmarks for crashes. 2008, the financial crisis, and 2020, the shelter in place and the lockdown. That's a good question to ask with the syndicators that you're planning to invest with. It is not normal, but here's a deal that I did in 2019, and a year and a half later, it divested in 2020. Original contribution was $20,000. And then $29,000 was the distribution at the end, meaning $9,000 was profit. $9,000 before taxes, that is. During that 18-month period, my IRR was an estimated 31%, which is ridiculously high. Could I have done better investing that $20,000 into the stock market? Probably not. Into Bitcoin, yes. Into my own business, who knows? If you have no plans, you don't know what to do with your money, then don't have it sitting on the sideline, invest some money. I also had another 2 projects that I got in end of 2019, exited 2020 as well, another year and a half later. My total contribution was $45,000 and my distribution back was $63,000, meaning my net profit before taxes is around $18,000. $18,000 is about 40% return on my $45,000 investment. 40% return for less than 2 years is pretty good. Now, this is not your average syndication. These guys are really good. No, they're not in Texas or Colorado and Florida. They're actually in a much different market. All the money's on the buy side. They buy properties with deferred maintenance, they force appreciation with value adds, make better living conditions for the residents. Everyone wins. And that's why I'm gonna continue investing with them for the long run as long as I can. Inside of another project I'm working on with them, they actually just refinanced that property. There's my contribution. Not only do I get monthly distributions, but I also get a refinance back of my capital. As you can see there, I got to return my capital due to refinance with more to come. It doesn't dilute my shares in the project. At the end of the project, I still get my full return, whatever the amount that we sell the project for. And because it doesn't dilute my holdings, my monthly returns are always the same, actually goes up as the property improves as well. That's another big pro for investing in syndications. If they are good operators, they can refinance out your money. In this particular project, I'm probably going to get back 35 to 40% of my capital while still getting the same amount of return as if I had 100% of my capital in there. With my freed up 40% of capital, I could deploy that, my little soldiers out there, to go out there and make me more return on my money. Essentially, I'm double dipping on the same amount of money. I'm getting 2 returns for the price of 1. There you have it, boys and girls. That's my personal experience with syndication real estate project investing. There's a lot of different real estate projects out there that you can invest in. You can provide gap funding. You could be a private lender for smaller projects. The list goes to infinity on what you can do in real estate. I love real estate so much that getting a real estate license might not be out of the question for me in the future. It's something that a lot of people do part-time, some people do full-time. I actually read an article where there was a doctor who did it part-time and actually made more as a real estate agent, but he does both because he loves both, and he did real estate because it was his family business. Real estate is definitely something that I believe should be taught in school. As part of the FIRE journey, I believe it's a must as well. A lot of FIRE members don't believe in owning property or purchasing their own house, and I don't find a lot of FIRE people talking about investing in the syndications. To me, there's no set way to set your FIRE allocations. You could be 100% in stocks, you could do 100% real estate. The goal is just to retire early, right? Whatever path you choose, I'll be there to support your choice. As long as it's legal and not illegal things, okay? There you have it, boys and girls. If you have any questions, comment down and let me know below. Follow me in a wifey's journey on this 10-year plan. We're on year 2. We're gonna be coming out with more videos to try to speed up our process, and we'll take you guys with us. Thank you so much for joining me today. I'll see you guys in the next video. Stay healthy, stay FIRE. Peace.